Today is Thursday, 23rd of July, and coming into the market open today after yesterday was another relatively flat day. Basically, closed as it opened. Still holding, trying to hold the 50-day period moving average, but for the most part, it looks like things are potentially starting to weaken across the board. The S&P is holding up relatively well, but the Qs is telling a different story. There was a little bit of relief over the last couple of days, but slowly grinding lower again with the 10 and 20 day below the 50 day, as the 50 day is now starting to flatten out and roll over. The Dow is telling a similar story, just albeit a lot slower. The 10 days now below the 20 day, and price is actually holding below the 20 day as well. So a little bit of selling pressure coming in across the board. The IWM's also holding up relatively well, but again is holding below the 20 day. The 10 day is below the 20 as well, and coming into the 50 today by the looks of it, which will be the first touch since it was actually reclaimed back in April. So could be constructive at the same time. The fact that it is coming back into this level, into this moving average, is a good sign in the sense that the consolidation period that we've been through, that we've been going through, is what needs to happen for it to end. But at the same time, it could end in the sense that it actually is the start of more continued move to the downside. The Kospi has been seeing a little bit of relief since these lows, but at the same time, nothing too major and kind of expected given the amount that is sold off. The VIX is pushing up a little bit today. There was a bit of a spike yesterday, but nothing too crazy just yet. The dollar index is also pushing higher, and it looks like the upside, the momentum to the upside is potentially going to continue from here. The semiconductor ETF, similarly to NASDAQ, nothing really to gain from that. Space stocks, no relief whatsoever. It's slight stalling out, but immediate selling coming into space stocks. Healthcare is also struggling to find any sort of bid. It is holding up relatively well alongside biotech, but still it's in a downtrend, and the 10 day is below the 20 day on both of these indexes now. Energy is probably the biggest story, and it's continuing the theme from just throughout this week, basically, in terms of this rally and in the prior week. And the fact that we closed above this key level on this energy ETF and is gapping again higher today is a sign that actually maybe things are going to push up more aggressively. And if these highs here at 61.70 get taken out, that wouldn't be a good look for risk assets at all. And this is coinciding with, of course, oil nearly touching the 100 mark today. 99.81 for Brent today, and potentially will hit that 100 mark. Whether or not it closes above it is a different story in itself, or a different question in itself rather. But the main thing that I'm looking at here is this swing point being closed above. And if it does close above here, then I think it really does pave the way for these highs to potentially get tested. The fact that the lower time frame moving averages are starting to reclaim the higher time frame moving averages as well. Not a good look. But basically the strength of this rally as well isn't a good look, given the fact that it's basically been straight up since these lows, and really no sign in sight of slowing down, with it being the 12th consecutive day of strikes between US and Iran. Gold and silver's still continuing its slow bleed, and Bitcoin as well is completely retracing this attempt at a breakout from this level. And really, if it was risk on, this would be catching a bid. I mean, it's held the 20 day really well and showing signs that it wants to push higher, but the market just isn't ready for it yet, and it makes sense given the fact that oil is doing what it's doing. So having a look at breadth indicators, the first close really below, or not the first close, but nearly making the lower lows, the first low, new lows since early June, and that is a sign that potentially this chopping period is actually going to resolve to the downside. I'm not reading too much into it, as it still is kind of hovering around the 50 mark, but that is something to pay attention to. And it also coincides with the fact that number of stocks making 1 month highs aren't really doing much. Number of stocks making 52-week highs also aren't doing much. Everything else is relatively flat. The big tell alongside oil breaking out is also bonds breaking out. Bonds are breaking out across the board in terms of the 2-year, the 5-year, the 10-year, and also the 30 years is nearly breaking out today as well. So the fact that the yields is still pushing higher, and it's actually starting to look like this is a real higher time, potentially going to be a real higher time frame breakout. It would make sense that this is potentially going to be, or this is one of the signals that will be obvious in hindsight in terms of the market selling off or retracing a lot more than what it has done already. And just having a look at StockBee's primary breadth indicators, the fact that there was a slight bit of strength on the Tuesday, which was completely not retraced, but it basically squatted in terms of there was no follow through in terms of the strength, really does suggest to me that actually it was just momentary relief, and the market is still in chop mode or has downside pressure. And there's no real signs of strength wanting to stay in the market. And a big one really yesterday is after hours was Google, and is obviously gapping down into the market open today after relatively solid earnings. The only thing really for the market to latch onto would be the fact that their capex has increased quite a lot, and at the same time it's obvious that would have been the case because of the AI expenditure, which was ultimately driving the market before that. So suddenly things that have already been apparent to the market, everyone knew what was going to happen in terms of these companies increasing their capex, is now, I guess, starting to get priced in terms of the forward-looking earnings and forward-looking market. And similarly for Tesla, their capex was up quite a lot as well, and as a result, the market's the stocks gapping down into the open today. So these big Mag 7 stocks, not painting the best picture in terms of the market wanting to regain any sort of strength or momentum to the upside. I also believe that the fact that these stocks are selling off into this news, given that semiconductors and other AI related stocks have already sold off or are continuing to just basically chop around, it isn't the best look in my opinion. I think that this is potentially painting the picture for a reason for the market to sell off. And if the Mag 7 can't hold the stock market up, then it would it's obviously just add into the downside pressure. So based on all of what I'm seeing today, I'm coming into the market open again today with a neutral bias. I don't think it's super bearish, but at the same time I'm more cautiously bearish, given the fact that there's just no signs of strength at all coming into the market, and there's clear headwinds or clear warning signs in terms of oil spiking, the energy sector spiking, Iran-US escalation continuing, and bond yields are spiking and breaking out on the higher time frame.